Hello.
Yeah, we're here.
Okay. All right. Okay. Now. Okay. I'm just listening.
Oh well,
Ira, you feel like talking China for a minute?
Sure.
So I understand your gold back one thesis, but do you think they can pull it off as long as they continue with a command and control economy, specifically a closed capital account?
That's of course the penultimate question with them. Can I say they can pull it off? Can they? But if we went back 40 years and you said there's been this transition to this extent, no, nobody would have said, yeah, they could pull it off when Deng Xiaoping, made the move in 1979. Listen, when you have a command economy, well, I'm not going to say it's a command. It's a mix. It's a mix. The orders come from on high, but it's the bottom that reacts, and that's not unusual with the Chinese. For all the time I spent studying China, and it was quite a bit in the 70s. I studied under I had great professors. I was in graduate school. I had some great professors. Ed Friedman at the University of Wisconsin was phenomenal, one of the top China experts in the world at the time. And we used to have an ongoing back and forth, because he was, and I would say, in the way that I read this, and I don't read Mandarin, so of course I'm at a disadvantage. Don't speak Mandarin. And he does, and he was brilliant. He's a brilliant guy, but I used to love to discuss this with him. And China, being a communist society, was like putting a size 10 foot in a size 2 shoe. It was a really hard fit, which is why, of course, all the violence that took place in the transition to a communist, quote unquote, communist society. So China has, certain cultural aspects that are very entrepreneurial. And if you go look around the world, wherever you look in Asia, where Chinese have settled in large amounts, because they do everything in large amounts, they've been phenomenally successful, and including the United States. So can they pull this off? I think they're in the process of pulling it off because they're buying so much gold. And everybody goes, well, what do you want gold for? But the Russians are doing the same thing. And it's a way, they don't know another way at this point to extract themselves from control of the global financial system by the U.S. authorities. And I think the U.S. has overplayed its use of sanctions. It's great when when you can do it, and through the SWIFT system and the way to move money around the world, everybody's captured by it. But it's not a static environment. There are people, there are countries who are really pissed about this and would like to get out from under it. The question is, do you and I want to hold yuan in our pockets? Well, not at this time, because of course your question preempts that, because if you believe it's a command economy, it's not the currency of choice that I would hold for reserve currency. But if you ask me on any given day, do I feel that way about the dollar? I'll tell you, I have my concerns about the dollar, especially when we get into these conversations, and they're becoming, the velocity of these conversations is becoming much greater on, what they call modern monetary theory and the ability to print yourself out of any type of debt problem or to meet any standard. Now, I know that's a simplistic analysis. I've done enough research now to know that's very simplistic, but that's on the face of it. So, and I'm not a conspiratorialist. People go right to the bottom line. Oh, yeah. No, I'm not. I'm just looking around at the world. And I go, somebody's moving things differently. And the Chinese are aware. You don't have to have 100% gold-backed currency. You don't have to have a 50%. You don't have to have a 30%. The Bundesbank, you can go check it, anybody sitting there, actually put out a paper in 2012 on the concept of gold-backed bonds. And it really caught my attention because literally for 15, 16 years, I've been pushing it as an issue that the IMF ought to take the gold. Most people don't understand that the IMF sits on a vast pool of gold that all the member nations contributed, when they put together the whole IMF and the Bretton Woods going back 70 years. So there's a massive pool of gold there. Why aren't they using it? Every time they cry, they don't have enough money. So I had come up with that the IMF should issue gold-backed bonds, and it didn't have to be dollar for dollar. It could be on a 5-to-1 ratio. People would grab those bonds, and you could borrow at a much lower rate of interest. That's the key to it. And I'm really beginning to think that that's what the Chinese are going to do here, because they're going to try to test the waters to move off a dollar standard. I know it's an arduous task, but the Chinese take on arduous tasks, and they're not the only ones. Again, the Russians are behind this too, and I'm sure the Iranians will jump. And there's others. The Germans have asked for their gold back. The French are always interested in gold, as they're so there's a lot of interest in this. I'm not saying it's easy in no way, shape, or form, but I really believe in Xi, as I pointed out in the blog, in Xi's speech. This is where they're going. Will they succeed? I don't know, but it'll make the world interesting as far as I'm concerned. So I am watching it.
Yeah.
All right. So right now, Angelo, hang on a second. So right now, what you're seeing is big profit taking in all the China names right now. Bob is putting in an ORL day. You know, the yuan itself is a little mixed, and Amazon's got more to go here to the downside. You know, it can go another 10, 15 bucks. So this should keep pressure on the indices for at least another 15, 20 minutes. Okay, so go ahead.
No, that makes total sense, Ira. But it'll be interesting, like you said, to see how they roll this out, right? Because, and then the other thing too is, you know, what comes first, the cart or the horse? Because even if they opened up their capital account, what are you going to buy in renminbi? I don't know if you could spend it.
Well, there's, you know, don't forget, they are selling renminbi bonds right now. You know, they've actually brought them to the market. So there are, renminbi or yuan bonds that are available to international investors. In fact, they've put them into the bond index, you know, for the World Bond Index, which, you know, includes emerging markets. So again, everything is a test. They test the waters. Oh, are we successful with this? And you know what? And they're doing it at the right time in a world that's starved for return. And let's face it, we're at the S&P levels here because the world is starved for any type of return on capital. They're not worried about the return of capital. We're definitely in the framework of a return on capital. So if I was the Chinese authorities, and they're not, believe me, they're not. Again, I stress to people, the Chinese are very astute watchers of the world. You know, I know last time we did a long thing here, I showed everybody the 1994 when NAFTA commenced, how the Chinese reacted. They are very astute watchers of the world. They have to be, because, you know, as the old song goes, you know, when you're Avis, you try harder because you're not at the top of the heap, and, you know, when you're hurt, you're only defending your position and doing stupid things. So there are all these things going on, and everybody will point to, well, this weakness in China, this weakness in China, and there are weaknesses in China. You know, they're over leveraged. But they're over leveraged. Don't forget, in their mind was they bailed out the world and kept it from collapsing in 09, 10, 11. By ramping up their system, and then they did it again in 15, 16. So they're very astute here, and I'm watching them because I believe that they're astute. I watch them, and the Russians are coming right behind. You know, the Russians are dumping U.S. assets. They don't do it in droves because they're not stupid. You know, they're not looking to cause a panic. They drip it into the market relative to the size of their entire asset base. So. They're worth watching. The question is the global system going to be disrupted? It's being disrupted every day. Every day that the United States, and this is the key for me. Again, you're at 3.8% unemployment. You just had 3.2% GDP growth. and you're running $1 trillion deficit this year. If you can solve that riddle for me, I'm all ears. But that ought not to be played. Just think if the economy, and I don't use the word recession. I find that so ridiculous. Here it's like this morning, Italy had 0.2 GDP growth. They avoided a recession, or they're out of recession. Germany had 0.1% GDP growth. They avoided recession. It's meaningless. If your economy is slowing that to a grind, you have problems that show up whether you are a technical recession or not. So, I find that ridiculous. But if the United States economy were to start to slow, that deficit would spin out of control, because now all of a sudden you'd have to ramp up certain safety net programs, and you would have declining revenues. So we are not in a good spot here, which is why, I've been pushing on that 210 steepener, because it's not an issue of what the Fed's going to do. It's an issue of the debt that overhangs the market. And when I sit and I talk to people who are of my age and Judd's age and older, and I go, what do you do with your money? And I'll say to them, any advisor who tells you to go out more than 5 years, you should walk away from immediately, because the debt situation that's building here, the uncertainty, and the fact that I can get as much return. I can buy a 2-year note and get let's talk real stuff.
2.5, basically.
Yeah, 2.2, so 2.2, 2.25. Let's say today on a 2-year, 501 at auction. So what am I giving away? 25 basis points? That's why would I take on an extra 8 years duration for an extra 25 basis points a year? To me, that's the definition of insanity, especially with all the uncertainty that exists out there. I don't care that the market's going up. Complacency is built into this system. I think everybody in this room listening right now would agree with that. There's a phenomenal amount of complacency. I don't care, because I'm going to trade what I see. And if you're going to keep pushing, okay, let's push together. I don't mind that. But from a bigger perspective, it's the concept of complacency that boggles one's mind. That what, you don't see these problems? Here, I'm looking at my board right now, and I know that people here watch it. The Turkish lira is pushing up against 6. This is kind of interesting. Judd, can you put the Turkish lira up? Okay.
All right, there it is.
Okay, you see it, right? Now you see the high made for the year. January 3rd, we got over 6 lira, right? And then it corrected on that day. That was also, and I've been looking at this for 2 days. It's really caught my eye. That's also the day of the Japanese flash crash. That we had that, that convenient time when Globex was basically closed from 4 to 5 in the afternoon, Chicago time, and the yen went, spiked considerably higher. But the Turkish lira, the dollar lira went much higher, and then of course corrected. But now all of a sudden, now it's Golden Week in Japan, so of course they're on vacation. Everybody's been warning that the yen was going higher because people who were short yen were afraid of another type of flash crash. But the lira is going up here, so I'm wondering whether there's a lot of Japanese investors who've unwound like lira yen, where they were parking money over there. So just a couple things to watch. But why is this pushing up to those highs again? Really catching my eye here. There are definitely movements afoot. I can't tell you for sure what it means, but I am seeing it. So it does catch my eye.
Yeah, I mean, euro yuan was strong this morning. Euro was strong against everything. Yeah,
which is amazing. Well, rates were higher, because of course, what the bonds actually were. I got my sheet in front of me, up about 3 basis points, and it's amazing how much money starts flowing around these numbers. I mean, we're talking zero. You want to buy an instrument? Go ahead, go buy a German Bund for 10 years and get 0.
Hey, Ira, can I ask you one quick question?
You can ask anything.
This is Matt. How are you?
Yeah.
So
Good,
to that
Matt.
end, to kind of play devil's advocate, I was listening to Lacey Hunt from Hoisington talk about in the developed world, not so much, this doesn't exist in weaker countries, right? But in the developed world with strong economies, more debt retards growth and inflation over time, right? It slows household formation and spending globally. So it's possible that, just to give it, the counter argument to that is that there's more debt, while it might have like a high spurt, a quick spurt of growth and inflation as they issue it and put it to work, but overall it just retards growth and inflation. So in developed worlds, couldn't it also just mean lower long-term rates for much, much, much longer, kind of like we see in Japan?
You know what, Matt, this is a great question. And I sat with 11 guys where I'm down in Scottsdale. So we have a Monday meeting, and these are all retired guys, some older, most older than me. And we all discuss it, and they all come from different walks of life. And we absolutely had a half an hour discussion about this issue. And I say, no, you can't be Japan for a few reasons. Number one, it starts with me because you're the reserve currency. And where Japan can make mistakes, as a reserve currency, you have to be very careful, because especially in a world where there's no exchange controls on and money flows literally at the push of a button, people can leave you. And if you bear a responsibility as a reserve currency, then you promise to be a somewhat reliable store of value. So you can't get there. Number two, when the Japanese entered the 25 years of slow economic performance, 97% of their debt was domestically owned. So when they went into deflation, listen, if you and I owned U.S. bonds and we actually went into deflation where the average cost of living declined 1.5% to 2% a year, and your bonds were zero, I'm still getting a real return on my money of 2%. That makes life totally different, which is why the Japanese could absorb it, because from a domestic political standpoint, Japanese citizens were almost being rewarded. And because corporations cut their profits by keeping people on, the unemployment levels in Japan never rose. So there are so many differences. I know when the people in my world, the global macro world, like to take out their theories and put this all together, it makes perfect sense. But I can poke holes in this, and I don't think that we are nearly that. And we are also in the United States. We don't run. You're not getting a real return on money until you probably get out to 2 years. But if we price overnight money, you're probably at zero real interest rates. Zero. Because inflation, the Fed chooses PCE, I say CPI, you say, we all find it, but we can probably agree that inflation is 1.92%. Well, that's basically puts you're just getting an absolute zero return on your money. So there are things that are so vastly different. And I don't think the United States can bear that. Plus, we have so much more debt. It took the Japanese 25 years to increase to that debt. But we're not only carrying debt. We're not only talking government debt. We're talking about your debt and my debt, all domestic, consumer debt, which is enormous. And when Japan went into that mode, they didn't have enormous consumer debt. In fact, even in today's Japan is a very cash-based society. It took a long time for people to start using credit cards there. And still it's a phenomenal amount of cash. So it tells you a lot about what their thought process is. So I gave you a long answer to, no, we're not going to be Japan. And the United States bears different responsibilities because of its role as the reserve currency of the world. And that makes it different. And that means there's a huge amount of holdings of dollars that can easily start to move here. So, and I'm going to tell you, I try to teach this lesson all the time to people. And Judd, I don't know whether he'll remember it or not, but it was probably 1989, 1990. And I was long the British gilts in anticipation of rate cuts by the Bank of England. My time may be off here a little bit, but it's not much. And I sat long gilts for 4 straight rate cuts. on and off because I traded because when they weren't. But I said, oh, they're cutting, and I thought, oh, I'll be long gilts. And all that happened was the curve steepened and the gilts went lower, and I got my ass handed to me. And had I been in 90-day British money, I would have made a lot of money. But it taught me a lot about how yield curves work, and be careful and just don't fall into the trap. Oh, everything's slowing, because if everything's slowing and the pile of debt is increasing, go look at Italy, go look at Greece, go look at Spain for a while, go look at Ireland. It need not go the way you think it's going to go, and that's my only caution, and which is why I watch the yield curves for a direction. So again, long answer to a good question. I'm sorry.
Thank you.
Ira, going back to Japan for a moment, relative to everyone else, didn't they always save a lot more?
Yes, I meant to say that too. Absolutely.
Yeah, allowing them to weather this deflationary storm, almost unscathed, wouldn't you say?
Yeah, and you know what? And who else is big savers? The Chinese are enormous savers. In fact, we just came down. We came out with data. What they said yesterday, the personal income and spending data. So people in the United States are drawing down savings in order to sustain their lifestyle. China has I forgot. They may have a 35% savings rate. I mean, you think about that. And it changes the dynamic so much, because in the United States, and that's why the Japanese could also, that's a great point about their savings. They had savings to draw back on. We don't have savings to draw back on, which is why the United States has to panic faster. We don't have savings. We're not a savings-based society. Look at Germany. They have savings. It's one of the things that attracts me to Germany from an investment point of view in the longer term, whether German real estate. I mean, the Germans are getting so shit upon here, for the good of Europe. Well, the good of Europe only works for so long, but it's why it's worth watching. To me, Europe is the most dangerous place in the world from a financial perspective. So, need not play out that way, but history tells me that it will play out that way. So we will watch. But these are great points. I mean, this is a great discussion. It goes nowhere as far as trading today and tomorrow, but it is things that you have to keep on your radar screen, because these things can turn in a minute. They can turn in a minute. So,
Tax is stalling out here too on the weekly, and you're going to get your reversal right now in the S&Ps. You're going to get here. Hold on, you're just about to get it. Let's see. There it is in the point and figure right there. You just got it, guys.
Where? I'm short. I'm covering at 28.
Well, you just got the reversal right there.
All right.
Just put it in.
All right. I'm canceling my offers or my bids. Ira, I wanted to ask you real quick. It's Pat.
Yeah.
I wanted to ask you real quick, and I don't know if this is just to go back to Japan. I mean China. When they were welcomed into the SDR basket of currencies, and they started their futures contract that is somehow convertible into gold. Do you think that that is? And then they started to offer the international bonds. Do you think that is something, like some sort of long-term preparation for them going to an asset-backed or a gold-backed yuan?
Yeah, they also have a oil current contract in yuan.
And isn't that convertible into gold?
Yep. And so PAX, that's exactly right. And you can't ever forget, because we're Western oriented and we're Americans, and it makes it worse. The Chinese are long-term oriented. I don't know how many are in there. There's that famous story. Some people say it's not true. Some people, but when I was in school, it had a lot of credibility. And there's people say it's true. Henry Kissinger says it's true. But there was that when Nixon was going to go to China, Henry Kissinger, of course, went as Secretary of State beforehand to lay all the groundwork and set what the discussions were going to be. And I'm going to raise one more point after, so let me forget about Lighthizer. So let me leave without talking about that. But Kissinger said, he was in a room with Zhou Enlai, who was the Chinese foreign minister. And Kissinger was awed by Zhou Enlai because here was a guy who did so much in the Chinese Revolution, was Mao's consigliere, so to speak. And Kissinger was really kind of, so he tried to make a conversation. And he said to Zhou Enlai, he said, Mr. Zhou, he said, what do you think of what are your thoughts, historical perspective on the French Revolution? Now, this was 1971. And Zhou Enlai turns to him supposedly and says, it's too early to tell. Now, this is only 180 years after the fact. So, the Chinese draw out, it's really a nice, whether it's true or not, doesn't matter. But it tells you there's a long-term thinking process. This Belt and Road Initiative, this is not going to affect somebody's quarter to quarter. They have a whole plan here, as you can see the way they go about. Now, let me just bring up a Lighthizer point because we're going to be inundated again with these trade agreements. The key point, from what I understand, which Lighthizer is fighting about, and that's why when Kudlow comes out and Mnuchin comes out, don't listen to a word, because they're not in charge of this deal. This is Lighthizer, and they're afraid of him. Everybody in the White House is afraid of him because he's a serious person and he knows his game better than anybody probably in the world right now. He's about trade issues. He's negotiated them. He's been on the side of the table. But his main concern with the Chinese is enforcement mechanisms. And they just can't come to agreement on the language. And the language is critical, because if you don't have the right language, then it's like Bill Clinton. I didn't have sex with that woman. Depending, is right. Well, it's only words. It's only words, and then you go arguing words. So there was an article yesterday in yesterday's South China Morning Post, and it was about the trade negotiations. And the title of the article was "The Art of Being Vague," and what do words mean? And they're fighting over very few words, but the very few words are significant. And if you don't get enforcement mechanisms, you've got nothing. You know what you got? You got as Mao would say, you have a paper tiger document. It is, if it's not enforceable, there's no teeth in it. But the Chinese also, one of the sticking points is they also want enforcement mechanisms, because their attitude is, hey, what about when you go astray? What about when you violate? And the United States isn't in a hurry to sign off on any of those. So this is when this could drag out for months. Mnuchin and Kudlow look at the stock market. Bob Lighthizer doesn't give a shit about the stock market, because he's got a bigger picture that things will work out the right way, because if they're not done the right way, they're not worth doing. He understands the political expediency, but this now gets very interesting. And I've started enjoying reading the South China Morning Post, because they really do some analysis, and they show you things that you just don't get from the Western media, and they speak Mandarin. So interesting times.
Can I ask you one quick follow-up on China?
Sure. Don't keep going.
Don't they have like $40 trillion worth of credit against around 12 in an economy of around 12? So effectively, they have more debt than we do, don't they?
I don't know how to answer that, because I don't know how to measure it, and I don't know what's real, and I don't know what's not real. And more than the debt, what's the collateral base? You can be leveraged up if you have the collateral, and it's good collateral to sustain it. Yeah, okay. There's companies in America who are leveraged up 10, 20, 30 times. Goldman Sachs is probably sitting with 40 times leverage on their book. And if it's liquid enough and you're collateralized enough, and your creditors aren't worried, what's the difference? But the question is, I know, comes from the shadow banking sector in China, which, listen, the Fed and Greenspan and Bernanke, they had no concept of how big the shadow banking sector was in 2000, 2008 in the United States. And we're supposed to be a transparent financial system. So good luck if you can figure out what the shadow system is in a country that lives in the shadows. So, I mean, that's a very, I can't have no answer to that question because I can't. And anybody who says that they can, I know we'll measure this, we'll measure that. I wouldn't take them, to me, that's not worth anything. We're going to, and again, I look to Australia, I look to New Zealand, I look to everybody around them going, that'll give me a better picture than anything that they're ever going to tell me. But I understand the point, and it's certainly well taken.
Thank you.
Ira, do you think Italy actually thinks they're going to get something by signing on with China in the Belt and Road, or did they do that just to piss off Brussels?
Oh, that was to piss off Brussels. And you know what? If I'm in their position, you've got to keep maintaining and showing them, hey, I'm independent. Yes, I'm part of the European Union, but you know what? You guys have fucked me. Now I'm going to fuck you a little bit. And I'm going to make life a little bit nervous because my numbers are so big that you can't say no to me anyway. And they know it. I mean, that's really Salvini more than Di Maio is. He understands, and I know who's advising him. And Yanis Varoufakis, who the Greek finance minister, but they had to get rid of him because he was so cantankerous in Brussels that the Europeans said, get rid of this guy. He's like, it's like throwing dynamite into a fire. But he's got Salvini's ear and talking to him about the leverage that Italy has and don't back down. So that's a very good point, and it's the way that they do get to exercise their.
But that's a worldwide phenomenon that's going on now because, Trump's pulled back from the world and China's, stepping up and everybody's signing on.
Yeah, listen, that's not old, but you know what? Really, when we go back, the Brits, when Obama was in office and China was signing up people for the Asian Infrastructure Investment Bank, the AIIB, and the United States was pressuring all the allies not to join because it was a counter to the World Bank and to the Asian Development Bank, which the United States controls. So, but the Brits signed up I think it was 2015. Cameron was still, and the White House was none too pleased. People forget about all that. I forget none of that because it resonates. So it's not, the Italians are just kind of reading from that playbook and going, hey, there's nothing you can do. And the more leverage I can exert against you. So now you don't want me in the Belt Road Initiative? What are you going to do for me? Are you going to ease up on these fiscal austerity and allow me to just start spending and ramping up infrastructure programs within Italy? That's what they're vying for. So they just keep putting the pressure on. Of course, the nuclear option for Italy is to say, hey, fuck this. You know what? We're going to let our banks collapse or a couple banks and watch what happens throughout France and Germany because those banks are so levered up to Italian banks. They're sitting there with Italian sovereign debt on their books up to their eyeballs because it behooves them so they don't have to reserve against it. So there are a lot of games going on, but that's why I make Europe far more dangerous than anywhere else because that's where the financial calamity could really take place.
Ira, is Connolly still alive? You sent me the book, The Rotten Heart of Europe, which was excellent.
Yeah.
Is he still alive?
Yeah, he's just disappeared. And I can say that because Bernard and I are pretty good friends. And email gone, his phone, I have it gone. Somebody told me, and it wasn't Bernard, he closed his business, which was in New York, and I don't know where he's at, but supposedly he's working on a new book. I don't know that factually, but I hope that I wish he'd let me write it. He could speak in my ear because Bernard writes. It's a heavy writing. He's an Oxford PhD. I think he's got his PhD from Oxford. He's so bright. He's the brightest guy I know in global macro. Not easy to cut through, but I mean I can't tell you. I still have it. I'm trying to get rid of them. If anybody can help me, I've got like 3,000 copies of that book left. And
well, I mean, everybody listening to this conversation should read that book.
Yeah, and you should send Ira an email and get a copy from him.
Yeah,
Ira sent me two. I've got two of them.
Ira said, I'd love to read that book.
I've got, I believe I'll be back. If you send them to me, I will not get to them because when I come back to Chicago, because then I'm going to just finish it. I've tried to give them to people. You know what? I'd love to sell them. The only reason we have it is because Bill Shepard and I thought the book was so great, and there was none available. They were selling for $400, $500, $600, $700 on Amazon because there were none available. So if you wanted it, and people who had them weren't letting go. There were only about 200, even though 2,000 were originally printed in 1995. Only 200 existed. Bernard wasn't sure what happened to the rest of them. It was widely panned in Brussels, which should tell you because they hated him. In fact, they made his life miserable. They kept suing him for defamation of character because Bernard was on the original group that put together the euro. He's so knowledgeable. He was at the Milken conference about 6 years ago, and some guy from Italy, a real arrogant guy, got into it. So they had a debate, and Bernard undressed him and spanked him and circumcised him all at the same time. It was a joke. The guy had no idea what he was talking about, and Bernard just ripped him apart. You can go find it on YouTube. It's there. It's from the Milken conference, I think, in 2013. But Bernard is certainly not dead. I don't know but he was so disillusioned because everything that he predicted in 1995. And then if you read the foreword that he wrote when we brought out the book again in 2013, he wrote a new foreword for the book as we requested him. The foreword is unbelievable. Everything that is in Europe has unfolded exactly as he said, and it's depressed the shit out of him. I'm just telling you factually. It has depressed him to no end, and I worry about him sometimes. But he is absolutely alive. That's a guy that if we get our shit together, I will get him out. I had him on Santelli once, but Rick just couldn't deal with him because for 3 minutes he's just too dry. And then Kathleen Hayes on Bloomberg Radio, because Kathleen and I are tight, and she had read the book. I gave her a copy of the book, and she got him for about 45 minutes, but it was grueling for her because he's not very animated. It's just not the way Bernard operates. Here's a guy who goes to mass every morning because he knows to humble himself in that regard. And I understand that. So that's the type of mindset that you're dealing with. And I say that with the highest regard because that's Bernard. And he's studied and worked under some of the, he's probably 71 years old now. So he's been through the ringer as far as, academia, and you can't trade off what he says, because I used to get Bernard stuff every day. Because Bernard and I would go back and forth and discuss these things. I'll tell you what, one of my great Bernard stories is I stood outside of Starbucks in New York on 47th Street. I met Bernard because his office was right over there. And for 3 hours, we had coffee cups standing on a cement post going back and forth. People were looking at us like we were insane. I mean, we had a crowd and we were just talking about things, and he could get so lost in it that, I would just listen. I'd wind him up with another question and we would go from there. But he's definitely needed in this environment. I hope he comes out with a new book because Europe is a very, very dangerous place. That's all I can continue to say. Because when it unfolds, it's going to be not pretty, and the whole world is at risk because of the amount of debt that's been piled up. But that's the way Draghi gets out of this, because he won't be around, but they're going to try to fold all those bonds they bought into a euro bond. That has to be their end game. I logically think this through, and it has to end there. In my mind, it can't end any other way.
Well, if he does come out with a book, maybe you can do an interview of him on Real Vision, one of those 2-hour deals or something, hour and a half.
You know what? That's a very good point. You know, when he was first started doing this, he wasn't acclimated to that. But yes, that's a very, very, very good idea.
Yeah, because you can't do a Santelli with him. There's no way.
Yeah,
No, you can't. You can't. See, if Anthony could do it, if I could feed him off camera, because then Bernard would have, but he'd be good with it, and that's a good audience for it. And it would boost the audience because you have to turn in. You have to tune in. And anybody who thought that they knew what the hell they were talking about, you have to tune in. I'm going to tell you what, this is one more funny story, and I'm going to go. But when we were bringing out the book, Bill Shepard and I brought Bernard to Chicago. So we went to eat at Capitol Grill. We got a private room there, and there were probably about 50. I invited 15 people. Pat Lynch, Leo Malave, these guys all came.
Well, hold on. You brought Lynch, but you didn't bring me?
I'm sorry.
You were MIA then, Matt. Come on.
The best is I actually apologized. I'm sorry, Ira, for interrupting. I'm sorry.
No, two things. Before Ira finishes up, the capital flow out of London's done. Okay, so don't look for any more downside. You got a match in Amazon. Came down to the first support levels. You got your reversal in the S&Ps. Chill out and wait for this afternoon.
So Bernard Lynch was there, and Lynch will tell you it was just great. We had him in this room for 3 hours. 3 hours. And Bill Shepard was laughing because we were peppering him with questions, and he couldn't get the food off his fork for 3 hours. It sat there. It was an unbelievable moment. Shepard's going, "Will you let him eat already? Will you let him eat?" And Bernard, in his beautiful British way, he's from Birmingham. Grew up in Birmingham, but in his beautiful way, his manners were so great. He wouldn't put the food in his mouth. It sat there on the edge of his fork, and Leo kept peppering him with questions. And what about this? And it was great. It was phenomenal moments with Bernard.
So Ira, final question: yes or no? Do we get a German? Do we get a German at the ECB?
Yes. Yes. Okay. The only question I don't know what the trade-off is going to be because again, this is going to be negotiated out. And Benet Courret, my French isn't good, so I'm not pronouncing this right. He won't be the head. The French have already had one. President of the ECB, it's not going to get it. It's just a matter of how much is Merkel, who's had her ass kicked by everybody when it's come to the ECB, how much is she willing to relinquish? Because the German citizenry needs the head of an it'll make Europe an easier place to deal with if there's somebody from the Bundesbank sitting at the head of the ECB. It's just important. And Wiedemann's kind of gone quiet. It is a little soft lately, and they now talk about what other Germans could be alternative. The FT had a piece, I think, yesterday or 2 days ago. It was a ridiculous piece, and showed no real knowledge. It wasn't the FT, I'm sorry. It was Bloomberg. It was BBN, the Bloomberg Net thing. They had no understanding of the history of this. But I think it's going to be a German because they need a German. They may look for somebody softer than Wiedemann, although Merkel and Wiedemann are close because Wiedemann was her top economic advisor. They could get worse. They could get Wolfgang Schäuble, who is a real adamant hawk, and they really needed to get him out of the position he was in as finance minister. But if they don't, it will be a major mistake for Europe not to have a German, because I really think the nationalistic tides, and I'm not talking about populist, but it's a fallback position. And if I was a German, would I want to fund the rest of Europe with my money? Because that's what I'm already doing it because you're paying me a negative 60 basis points on my 2 year notes. So I'm already doing it. But if you're going to ask me to send money transfers in a direct fashion from Germany to Italy to Greece, you know what? I'm going to have a lot more say. What's the trade-off for me? How do you buy my support for this? And it has to come from having a German. And I can't read the mainstream media because they just get fed by whoever's, wants this story out there. So I'm just paying very close attention. So it's a very good question. It's worth watching. The more important thing from our perspective is what will be the fallout for markets if that happens.
All right. Well, Ira, thanks a lot for stopping in, and we're going to have you back, and we'll discuss the fallouts and everything else, and people can, send me questions, and then we can send the questions to you and let you think about them a little bit.
Yeah, absolutely. Just let me know, and I'll do that ahead of time. Then we can just jump right into it. That's not a problem.
All right. Well, thanks again, everybody. Unfortunately, I have to cut this short because I have an appointment to go to. So that was fabulous. Everybody loved it.
Thank you, Ira. Thank you.
But let me tell you, let me remind everybody, it's the same thing when I lecture to journalism classes. Anybody who you sit and talk to is only as good as the questions you ask. Ask good questions. It's easy. So thanks for the questions. They make it all really easy. But you guys are a knowledgeable group, so of course they just flow, and the flow is easy. So all right, I look forward to the next time.
Thanks, Ira. Thanks a lot.
Okay. All right. Okay.
Bye. Hey, and I'll send you the recording.
Okay. Thanks.
All right, guys. So this capital flow is over. Don't be looking to do anything. London's closed. You got the reversal on the 25 by 3 in the S&P. Don't look for any more. You had a good enough low in Amazon and a decent enough low in Google. It's really not going anywhere. And now you have to see what the game is this afternoon, and it'll be a different game. So, and I'm about to get out of my pot stock. I never got filled on this, and now it's just back into congestion. And I'm going to leave with a clean head.
Well, that was a
Sure,
great
before you go, can you maybe leave it on the NASDAQ
Yeah.
when you leave?
Yeah, I'll leave this going.
All right, thanks.
Matt, anything else to add?
No, that was great. That was an incredibly interesting conversation, and it really was.
Oh, he's got a lot of books.
Yeah, and I want to get a copy of that. Hey, Angelo, when did he send that to you? Just recently?
No, 2 years ago.
I got a copy here, Matt, if you want it.
Yeah. So if he doesn't send me one, then I'll get your.
But it's the kind of book I had to sit there and read it with my laptop so I could look shit up.
Oh, I'm sure.
Yeah, it's
okay,
an intense book.
I'm going to read it again this summer.
I'm sure. Yeah. Ira had invited the it sounded like the board of governors or the board of directors of the CME group out to Capitol Grill. So Bill Shepard was there. Bill Shepard is just a very smart guy, a great trader. Owns Shepard. I'd imagine Shepard is still open, right? Shepard.
Yeah,
County?
that's where Ira's got his office in Chicago.
All right, and then
ever since Barry kicked us out, everybody's been at Shepard.
With Shepard, okay, and you guys have all heard about, you've heard us talking about Leo, and Leo Malamed, and then Pat Lynch. I thought was funny because I thought that I had to make a comment about Pat Lynch, and Ira knew what that meant because Pat Lynch ended up on the board of governors because I got divorced. So that was my spot that they were grooming me for. And then I got divorced and I drifted off. So it was kind of interesting because that's exactly what Judd said. Oh, Pat Lynch was there. You didn't invite me. Well, that's because you disappeared, Matt. And I did. I disappeared both then and now. Anyway, I would have loved to have been at that dinner. How about that?
Hey,
all right. I'm going to let you guys talk about amongst yourselves. I got the NASDAQ up. And I'll put the other NASDAQ chart up here with it.
All right, Judd. Call me later.
Yeah, I'll be back this afternoon. I'll be back in a couple hours.
All right, brother.
But here's the there's the NASDAQ.
All right, thanks.
All right.
Thank you.
Bye.
Leaf, the name of the book is The Rotten Heart of Europe.
Of Europe, yeah, I saw. So, Angelo, you know, Pat Lynch, the guy that he was talking about, and I think I did it kind of to bust my chops a little bit. So Pat Lynch is a good guy. I like him. You know, he ended up taking my spot on the board of governors that they were grooming me for. And you know, I knew that had I not taken the time off at the point that I did, that would have been my spot, and I'd have been sitting at that dinner, and that would have been cool. I would have loved to have sat and listened to have been a fly in the wall of that room. That's important.
I thought you left.
Hey, Ira just sent me a note to pay attention to Bungie. So he's looking at, I think there's some farm thing coming out. But if this is starting to bottom and go, you know, that's China demand. So it's something to look at. All right. Yeah, that was real simple, okay? You know, this is a real straightforward deal. You know, it's a capital flow trade, okay? So they started out the day, sellers, okay? Matt gave you an opening range trade to the downside. Everybody took the opening range trade. The most you were looking for, I was looking for, was this, you know, basically this print right here in the 29 to give me the reversal on the 25 by 3. Okay? That's all I was looking for. So markets are going to turn at certain times, all right? The highest probability time, you start looking at 10 o'clock for the London capital flow, 10 o'clock Chicago time, for the London capital flow to turn. So you look at 10:10, you look at 10:30, and then sometimes it can last anywhere from an hour to an hour and 15 minutes longer directionally. And then you're looking at the half-day bar, okay, to see how that sets up for the next trade. All right, so this didn't get down into the averages. This one was short of the averages. You got the point and figure fill. And you heard Matt, as soon as I said that's it, you got your reversal. He got the hell out of his shorts, and Abby got long. So, you know, the more time you spend listening to me, when I say stuff like that, you know, you got two choices. You look for a contra trend morning trade for the capital flow to change and go the other way. You get the hell, for minimally, you should get the hell out of your short-term directional trades, okay? And give it up. You know, it's month end. Everybody, you know, we're not going anywhere. So now the next turning time is tomorrow into Thursday. And I still don't think we turn. You know, I'm not ruling it out, but I don't think we turn. So, you know, I just think, you know, it's a game of, you know, finding the ones like Xilinx. I mean, this was a good buy this morning. This is going back to 125 or 126. This is going to go back up and get into this gap. You know, Microsoft's not breaking. The rails aren't breaking. S&P bonds aren't breaking. S&P pit bonds, all they did was come down, fill the gap, get back into the, you know, into momentum and stop again. You know, and it's a raging bull market. It's going to take more than a couple hours to turn direction. It's going to take a couple of days at one of these big macro areas. We're at a big macro area, but we start closing over it, it's going to be a huge freaking melt up. You know, in the other match you had this morning, 21 was where all the stops were in the bonds. So the first time up, when I saw the bonds at like 16, 17, and the S&Ps filling out that point and figure reversal, that was it. You know, for me, that was it. You know, it was Amazon, I was looking for Amazon, to come down, into around 10 to 15. It did that. Google wasn't breaking any farther. NVIDIA was still strong. I mean, you got to pay attention to this shit. You watch today, Google will close over its 50-day. So, that's how I come up with that stuff. I mean, that's just 45 years of watching capital flow, okay? You trade the flows. You trade the time frame. You got the short with London selling. You guys got short. You made money on the short side. Going into London's close, you get the fuck out. I mean, I interrupted Ira to tell you guys to get out. That was the end of the capital flow. If I say it's the end of the capital flow, that's the end of the flow, boys. Don't trade that side anymore. It's time to either get the hell out, have a trailing stop if you're still fucking married to it. And now it's going to be a shit show going into the end of the day.
Hey, Jeff.
Yeah.
Assuming we wanted to play the opening range at some point in the 10-year, was it 430 seconds as a first target? What would be a reasonable first target? Is there like a dollar amount that you typically arrive at? It's like $200, I think Pac said, or?
Well, if that's what he's using, I haven't even looked at it. Here, let me pull it up. Oh, here, let me pull it up over here so we can all see what we're talking about. Oh, look what they did. This is the opening range trade today. Is Pinterest. Boom. Yeah. And, the rails, you don't break with this going on in transports. And what was the news out? That whole thing with Pelosi and friends are going to do a $2 trillion thing that they're talking about with Trump for infrastructure? Was that the news while I was out?
Yeah, pretty much.
Okay. All right. So let's see what this thing started out at. So what was today's opening range? 7 o'clock. So 123.10 was the opening range. 123.10 and a half.
Oh, so you started at 740.
720.
20, okay. Yeah.
Yeah. So, you can pull that up because you got a pit chart, okay?
Right.
You got, anytime you got a pit future, put it up next to the all session so you can break it out and you can visually see it. You can see in the morning, how late they're posting the S&P pit. Mm-hmm. It's sometimes it's a couple of minutes behind. They're posting the NASDAQ right away, but the lag at the S&P is brutal. So, you just got to rely on PACs for that because, I'm not going there. And even here in the bonds, the 30-year, they took them down into that 730 number first. And once they went bid back above the opening range, and you had especially when all you guys, most of you sold the S&Ps with PACs at 830. When you're selling the S&Ps, the other side of that's long the treasuries.
Yeah, because they ripped and never looked back at around 940.
Yeah. And then they stalled out at 10:10 Chicago time, going into London's close. They stopped buying the treasuries and selling the stocks, and they started going the other way. That whole capital flow is done. Now, you start getting over 147.21 in the 30-year. They'll keep buying that going into the end of the day. Here, let's look at some of the short-term stuff. Here's the 5. See, the 5's already got an ORH, but it's already up into 115.22. Let's see if I can pull up the 2s. Yeah, and the 2s actually look better. So it's the short end of the curve where the money's going. So now I don't think you trade the rest of the day. I think the only thing that matters today is the closes, and then how the stuff starts trading tomorrow. Gino, I'm alive and kicking. Well, Sean, you shouldn't go clean when during that time frame. That's when you're looking for things to turn. Is that 10-10-30 time frame? You had the direction from 8:30 to 10-10-30. You're getting an hour and a half direction, and then you're looking for it to abate. This is what Ira was looking at right here. Bungie. So they, had bad earnings, and now they're coming back up. If this holds tomorrow, then you buy it. It'd be interesting to see at the end of the day if you get a reversal in the peso too. I'll take a look at that one for tomorrow. In the meantime, I'm not doing anything. Absolutely anything. We're still up here, at a big level in the S&Ps. We don't have confirmation for higher yet. We're still screwing around with the level, and I don't think you're going to know until Thursday. Shopify, look at this thing. Holy shit. Okay. Yeah, and this Carvana thing is going to close strong too. All right, I'm going to walk away for a couple of minutes. Anybody want anything? And then, I'll be around for the rest of the day, or at least until 3. And then I'll be back again later. And so then I'm doing that matrix thing tomorrow after the close. So again, if some of you guys are in the room and you want to, get that work, you got to up the program.
Judd, is that something different, or is that us?
Well, you're more than welcome to, come in if you want. This is for people that just bought, that level of service. They get the matrix sheets and just how to visualize and use them from one level to another. That's basically all I'm going over here.
I got you.
Because otherwise everybody's just kind of looking at a sheet and they don't understand what they're supposed to do with it.
Welcome to my world.
Right. It's me every day. Do I hit the buy or do I hit the sell?
So I can't just stare at it all day and it won't just print money? That's not how it works.
Oh, God.
You know what? I tell you what, though, if you're patient, it will.
The only people that aren't in are people that are in for the room only. So was everybody happy with having Ira in? I think if I could send them, questions that you guys or stuff that you guys are interested in talking about, and then Matt and I can at least put it out on Twitter or whatever else. We'll get some more bodies in the room, and I can try to get Ira to open it up to his macrobiotic crowd, and we can have a more robust conversation. Well, there aren't many guys that are smarter than Ira.